All right, welcome back everybody to Altcoin Daily. My name's Austin. Today we're talking about Chainlink and Kyber Network. Major update on Bcash. We're talking about the altcoins Polkadot and Theta, as well as EOS and Tron. And of course, big news day first involving Bitcoin. Hit the like button and check this out. Wilshire Phoenix has officially filed with the SEC of the United States for a publicly traded Bitcoin-backed fund. The reason that this is such a big deal is because this fund, if approved, is about to go toe-to-toe with Grayscale's Bitcoin Trust. Investment firm Wilshire Phoenix has just filed with the SEC for a tradable Bitcoin fund similar to the Grayscale Bitcoin Trust. And they're aiming to make this a better option. Customers will want to use them more, meaning that we are watching in real time the Bitcoin game theory take place. Now, for those of you who follow us on Twitter, highly recommend, but Grayscale bought over 9,500 Bitcoin in the last 8 days, and for reference, only 7,200 were mined in that period. Think about that. When we say Bitcoin game theory, one company to another company, one government to another government is not going to let the other government or company profit in place of them. These investment firms are watching Grayscale Bitcoin Trust make money off of this, and now they want in. Investment firm Wilshire Phoenix has filed an S-1 registration statement with the SEC for a publicly traded Bitcoin fund with regulation. In a direct quote, the registration reads, "The shares will provide investors, like you, with exposure to Bitcoin in a manner that is accessible and cost-efficient without the uncertain and often complex requirements relating to acquiring or holding Bitcoin." Now, as you know, with Grayscale, or their GBTC, they buy the Bitcoin, they custody the Bitcoin for you, and then you buy a share in their trust. They were the first. Now we have our second domino with Wilshire Phoenix if they get approved, and once issues, shares of the trust can be bought and sold throughout the trading day like any other publicly traded security. So who is Wilshire Phoenix's prime customer? Similar to Grayscale's Bitcoin Trust, GBTC, Wilshire's BCT aims to allow the retail public to buy Bitcoin via shares of stock on the mainstream market, with each share backed by Bitcoin and priced according to Bitcoin's going market rate. And Wilshire Phoenix doesn't plan to be the same as Grayscale, they plan to be better. GBTC, however, often bears a high premium, meaning customers pay notably higher prices compared to buying actual Bitcoin on the crypto market. Notably, this includes a 2% annual fee for custody. Well, the new filing with Wilshire Phoenix proposes a lower fee, not 2%, but of 0.9%. This Bitcoin chess game is happening. Now, who is going to custody the Bitcoin? Because Wilshire Phoenix in the past has had a well-known relationship with Coinbase for many years, but according to this new filing, they have tasked Fidelity Digital Assets with holding the fund's underlying Bitcoin in custody. So another win for Fidelity, another win for Bitcoin. Let me know what you think down below in the comments. Next piece of news before Chainlink and Kyber Network. Developer activity surrounding EOS, Tron, and Bcash has plummeted. Now, full disclosure, while overall developer activity is down for most leading crypto assets, some are winning. Core code updates appear to be on the increase. There was a study done specifically with numbers. It's a blockchain developer report, specifically with numbers for the second quarter of 2020. Here it is, Q2 of 2020. If you're wondering which altcoins, what are the best altcoins of 2020, which ones are actually making progress in Q2, the majority of major protocols did see a moderate decline in developer activity, no more than 20%, likely due to the pandemic that we had in Q2. The winners, though, were as follows. Polkadot saw a 44% increase, and Cosmos saw a 15% increase, saw a substantial rise in developer activity, though growth may not continue at this rate given their recent major releases. In Q2 of 2020, 15 and 44%. Those are the coins that were making moves. For developer activity, meaning dApps built on the blockchain. Well, what about the blockchain itself? What about core development? Well, Theta saw an almost 1,000% increase, and Cardano saw almost a 600% increase, saw the largest increases in core development code updates, though these trends may also reverse given recent price action. They may reverse, but in Q2, those were the winners. Let's keep going. Ethereum dominated its share of smart contracts, 79%, dApps 82%, and daily active dApp users, more than twice the closest competition. So Ethereum is still the number one dApp platform, despite ETH killers. And if you're wondering how they accumulated their data, well, this was a measure of commits across thousands of repositories from the top 12 development platforms that were analyzed, with the commit date classified by month and developers deduplicated. So they didn't duplicate. And like what I said earlier, EOS saw an 86% decline, Bcash 63% decline, and Tron 51% decline in developer activity. And this last chart is more big picture. These are the active developers, quote unquote, holding the fort. So most major protocols saw a modest decline in active developers, nothing greater than 20%, and Cosmos grew 15%. So you can see a decline pretty much for everybody: Ethereum, Bitcoin, Hyperledger, Cardano. Cosmos saw the uptick, Ripple, Corda, Stellar, pretty stagnant. Let's remember these statistics, stay with me, and we'll check back in another quarter and we'll see the progress being made. Next piece of news. Cryptocurrency exchange CEO has ordered their employees to make fake trades, according to leaked documents that show this. So Canadian exchange CoinSquare was practicing so-called wash trading, according to leaked emails, Slack chats, and other files. They have been caught, and generally speaking, wash trading violates security laws. It's illegal, so I would put this on your radar to watch out for. This is a Canadian exchange. And when we say wash trading, it means that they're automatically buying and selling cryptocurrency between accounts it controls, looking like there's a lot of activity on the exchange, but really it's a net zero. Nothing happens, and they trick the customers. We have direct quotes from their CEO. Turn it back on. One seemingly angry March 2019 Slack message from CoinSquare CEO Cole Diamond to other employees of the company read, referring to the code that managed internal trades after an employee switched it off, fearing retaliation from regulators. So the employees were trying to do the right thing, and their CEO says, and I quote, "Turn it back on." I want to share with you one more direct quote, but several of the leaked documents show CoinSquare CEO Cole Diamond pushing the company to practice wash trading, and employees of the company being uncomfortable with the practice. In a direct quote from emails between colleagues, he said he didn't approve, but that he did it because Cole asked him to. One email between colleagues read, referring specifically to an employee being told to practice wash trading. The decision to continue wash trading was final by Cole, the email reads, adding that the senior staff asked others to stop using the term wash trading in emails and Slack messages, as it could incriminate them in a problematic paper trail for the company. So hopefully this exchange faces legal action. This is tricking their user base. I just want to keep you updated. Okay, interesting news out of the Bcash camp. Bitcoin.com's official YouTube page was purged. Now, let's check this out. I am not for censorship, so I don't think this is right, but it happened despite how they try and trick people. YouTube censored their page. Their page is no longer available. So maybe it is right. I don't know. You tell me. But this is the Bitcoin.com official YouTube channel, and it is no more. It got censored. And next piece of news, bullish for Chainlink. Chainlink price oracles dominate DeFi data feeds amid Kyber swap integration. So Chainlink's price oracles are quickly emerging as the industry standard data source for the DeFi sector, with top project Kyber network integrating the price feeds for its token swap. So this is a little altcoin partnership. And some of you have been asking me what Kyber is. Basically, it's a decentralized liquidity protocol, so it provides liquidity. Watch this short clip.
Kyber is a decentralized liquidity protocol that can be integrated into any application to enable the exchange of tokens without the need for an intermediary. Users and developers utilize Kyber for their token swapping needs daily. As such, Kyber's ecosystem and trading volume had grown exponentially, making it the most used and most integrated decentralized liquidity protocol in the world. Here is why Kyber is a leader in decentralized finance. Kyber's liquidity system lives entirely on the blockchain, allowing different blockchain apps to easily integrate the protocol as part of their token exchange, payments, asset management, or other operations. Kyber also ensures the best rates by collecting liquidity from more than 40 different liquidity sources called reserves. In addition, all operations are fully transparent and verifiable on the blockchain.
So they pool liquidity from different sources, sort of a decentralized liquidity pool, and now they have partnered with Chainlink. A blog post published by KyberSwap describes the integration as protecting users executing token swaps from slippage while safeguarding against price manipulation. All right, that's the video. My name's Austin. Like always, see you tomorrow.